in the program.
Thanks, Alana.
Well, a V shape, a U shape, a W shape, bonds, chips, cryptocurrency. If this is all just sounding like jargon to you, then you might not be familiar with the stock market. But that doesn't mean that now isn't a good time to consider getting into it. Here to give us some more insight into whether we should be considering stocks during COVID-19 from BostonTrading.co is Jeremy Britton.
Thank you.
Hey, Jeremy, how are you?
Really good. Spent an hour in hair and makeup and I've got this black light on me. Sorry about that.
Oh, fabulous, fabulous. Now, look, Jeremy, it is safe to say that we are in unprecedented times and certainly not out the other side of COVID-19. Why is the stock market still sitting so relatively high? I guess we've, particularly over the last 24 hours, seen a really bonzo time over there off Wall Street with that tech rally. Why is the economy still, why is the stock market still sitting so high when I guess the economy is really suffering?
Well, when you look at the stock market, it's the average of how all the markets are performing. So if you've got some gangbuster ones like Facebook, Google, Amazon, Apple, these companies, they actually drag up the average. But if you look at the bottom 90% of the market, most of these guys are struggling. They're cutting dividends, they're cutting earnings. There's companies like Hertz filed for bankruptcy. So there's a lot of carnage at the bottom end, but the news reports don't show it because they're reporting on the average. And if the top 10 are going wonderfully well and the bottom 90 are going terribly, the average looks okay, but it's really not okay.
So I guess for non-investors looking to get into investing, and this is all pretty unfamiliar territory, what's actually the easiest way for people to get started and how much capital do you really need?
You only need a couple of $100. Years ago, you used to need to buy like $1,000 or $500 worth of stocks and parcel, but these days, discount brokers like Robinhood, you can literally buy $100 worth of a company and just get in. The easiest way to choose stocks, in my book, I cover 9 ways to choose your own investments. But very quickly for this morning, I'll give the trimmed down advice is invest where you spend. At the moment, no one's flying on planes, no one's taking international holidays, but you're still buying Panadol, you're still paying money to the electricity company, you're still paying money to the bank to pay your mortgage and your insurance. So if you're giving these companies money every single month, these are the first companies who are going to recover out the other side. So look at where your budget is, look at where you're sending money every single month. Those are going to be the stalwart companies. We've been through this before with the Great Depression. We had the Spanish flu in 1918. And there's companies out there like the big banks and mining companies who've literally been around for 150 years or longer. They've lived through depressions and recessions. They've lived through pandemics and they're going to be okay. But it's these newcomer companies that are only like 10, 15, 20, even up to 50 years old that might not be. And one way is looking at where you're spending your money, where your friends are spending your money, saying if everyone's cutting back on their expenses, say shoes or something like that, those companies are going to fail. Whereas your grocery stores, chemists, banks, these companies are going to be predictable over the next 2 years because it is going to take us a long time to recover. I suggest people save 10% of their monthly income and invest that. Now, if you save 10% every month, at the end of the year, you've got a month's worth of income. So if you have a bad month, you're away from work for a month, or if you're sick for a month, that wipes out a year of savings. So look at the economy and say the economy's been shut down for 6 months. It's probably going to take us 6 to 7 years to recover from this. It's not going to be a quick recovery, despite what the stock market says. You look at the underlying earnings and the dividends and the amount of money the companies are making, it's certainly not going to be back to normal for a long time. But you can invest into safe, predictable companies that you know because you support them every day with where you're spending your money.
Well, this is explaining the rise and rise of the share market, darling, I guess. Afterpay, another buy now, pay later platforms when you're talking about where are people putting their money. I mean, is it still worthwhile looking into stocks like those, or is that they've kind of maxed out and we need to have a little bit of a view of some other sectors to keep our eyes on?
Yeah, Afterpay is trading on around about 300 times earnings. So when you look at how much you put in versus what you get back, in the olden days you'd put $100,000 in the bank and you'd get 5% back. Or if you buy an investment property for $100,000 and you rented that for $100 a week, it's about a 5% return. So it'd take you 20 years to get your money back. But right now, buying Afterpay, it would take you 300 years of earnings to get your money back. So it's ridiculous. And also Tesla is on similar multiples. And you look at the boring, predictable companies are going to do boring, predictable things. And they're going to be okay over the longer term. Again, if you're someone who's putting all this money into Afterpay every single week, by all means invest into it. But I think most people are just getting the boring, normal stuff. When COVID is over, when COVID is here, we're still buying Panadol, we're still buying food, we're still buying petrol, we're still buying a few things around the house. Those are the companies you want to look at because you're most familiar with them when you give them your money, and you may as well get some of that money back by investing into them.
Well, then, speaking of the familiarity, choosing stocks, or do you choose crypto sort of projects like Bitcoin? Because I do not understand that space at all. So would it be a wiser choice for me to pick something like stocks, given that I know a little bit more about it?
It's certainly an easy introduction. I cut my teeth on stocks when I was 19 years old. I've been in the space for more than 25 years now, and crypto is obviously a relatively new thing. But with the governments of the world responding to this pandemic by just printing lots and lots of money. And we all know what happened in Zimbabwe 10 years ago. We all know what happened in Germany after World War I when they just started printing money, and all of a sudden, you were a millionaire on paper, but it took you $500,000 to buy a loaf of bread. So people are buying into Bitcoin right now because Bitcoin is scarce. There's only ever going to be 21 million Bitcoins in the world. And this is also what's been pushing gold up, because gold is scarce. You can't make any more gold. Governments can keep printing money because it's just paper, but that's going to give us hyperinflation. So people are buying Bitcoin, people are buying gold, silver, things that are scarce, because those will hold their value year after year after year. And 1,000 years ago, 5,000 years ago, it took an ounce of gold to buy a man a suit. And nowadays you can still buy a suit with an ounce of gold, but you can't do that with $10, whereas $10 used to be worth a lot of money when we were kids, right? Now it's worth nothing. So with governments printing, people are getting into what they call Bitcoin is digital gold, because it holds its value. It's a scarce commodity, but you can actually email it to friends and family. And it's very, very cheap as far as bank transfers. Like we transferred $10,000 to an accountant overseas for our company.
Oh, I hope it was legit, Jeremy. I hope you didn't get scammed. I hope you didn't send it, via Tinder or something like that.
No, this is how we pay our people with Bitcoin, and literally costs less than $1 to transfer that much money. Whereas if you did that through your bank or through Western Union, it'd be up to $50 or $70 in fees.
Yeah,
so
fair
Bitcoin's
point.
not just for holding on to, it's actually for sending money to friends and family in other countries.
Look, you've really simplified this, Jeremy. It's making so much more sense. I think for people that are listening to this right now and potentially want to find out some more information, how can they find you at Boston Trading?
BostonTrading.co is where we actually run a crypto hedge fund. It's kind of like when you have your superannuation, they take your money and put it into a whole bunch of stocks. So we take the money and we put it into a whole bunch of cryptocurrencies, which we choose for you. And that's been going for about 4 years now. We put out a newsletter every month saying how we're going. And some of our coins are up 100%, 400%, 1,000%. But we do a lot of research to buy the good ones. So that's what we do. Again, using the same process that I used to choose stocks for 20 years, we apply the same process to choosing coins and finding the best ones, the ones that aren't schemes, the ones that aren't going to go broke. So BostonTrading.co is there for people who just want to invest and get into crypto without thinking about it. We do it for you. Otherwise, Trillionaire.com is where you can go to learn more about cryptocurrencies if you wish to choose your own.
Oh, well, thank you so much for giving us those tips and tricks this morning, Jeremy. It's been a pleasure to chat to you. All the best.
Most welcome. Thank you.
Jeremy Britton there from Boston Trading. You're on Ticker Jumpstart. Still to come, the Victorian Chamber of Commerce CEO, Paul Guerra, he's going to be joining us after 8:30. You're on Ticker Jumpstart. We'll be back right after this.